yes, we owe that amount, that it was under-remitted, but I asked them to waive any penalties and interest that may be due. And so that's yet to be determined. If they do assess penalties and interest, it could be very costly because on a portion of it, they'll be going back to 2004, which I think is ludicrous. So anyway, that's the story on that. There was a second audit done, and that was on property tax in my office as well. And it was for the same period, 2004 through 2011. There was a determination in that audit that, and it gets complicated, that ERAF should not be a factor in allocating the unitary assessed values. Unitary is a state assessed board roll.
PG&E railroads.
Yeah, basically it's railroads because they can't put it in one TRA, so they put it in TRA 1 because it goes throughout the county. Anyway, that determination was made and it resulted in, what is it, about 620,000 over-remitted to ERAF. So on the state side, we have to pay 370,000. On the property tax side, we're to the good 620,000. Both of those things are in the budget. There's revenue of, I think it's 620,000. That audit is not finalized yet either. So these are preliminary estimates.
That would be a one-time.
And that's a one-time fund. So my complaint to the state is that they're coming in and they're auditing for like a 8-year period. And these are very complicated functions. And I appreciate the oversight. And plus, the state they're a little bit flaky on what the rules are. So it is what it is there. I think we're very fortunate that we're coming out to the good on this. Any questions about that? Another thing I want to mention though is that in the property tax audit, with that ERAF change, that will that will mean approximately 200,000 ongoing additional revenue to the general fund. So that's good news also.
That's on the railroad.
That's part of the secured tax roll. It's
Okay.
collected with secured property taxes. So
Do we get all the 200 or do
we
we
do.
get?
That is our share.
That's our share.
That's our share.
Okay.
And actually, all the taxing entities throughout Lassen County will see a little bump in their property tax because of that.
What was that for again, Karen?
It's a change in how property taxes, specifically the state assessed unitary roll, how those taxes are allocated to all the taxing entities. ERAF was included as a factor in the formula, and the state controller said it should no longer be, which is kind of bizarre because ERAF came about in like 1991, and it was under the direction of the state controller's office that it was included in that calculation. And then somewhere along the line they said, no, we don't think it should be anymore. And we were aware of that determination by the state controller. The County Auditors Association, statewide association, was aware of that change in formula or in determination, but because of the state controller's kind of track record of changing their mind, it was decided as a group not to implement the change immediately.
And I'm sorry, I didn't hear you, but when does that become, when do we start receiving those additional?
This fiscal year. And plus we'll receive the 620,000 as part of this year's budget.
which is a 250,000 boost, because you have to pay back the 370 on
370.
the other side
Correct.
on the
But
unitary.
those of them are already in the budget.
Yeah.
Right.
Now, my question is, the labeling of this is estimate court revenue to ACO per SCO audit.
It's,
It doesn't have the
it
courts involved.
should be AOC,
Yeah.
Administrative Office of the Courts.
Okay,
Oh, gotcha.
It was the, right, the AOC audit done by the SCO.
okay. I was gonna say Mary.
Go again.
Gotcha, that's good, I got it.
So if any of the board members ever get the opportunity to talk to their, anyone from the state, they're really doing us a disservice by waiting so long to come and do these audits. It's not reasonable to wait that long. Plus, they didn't even go through the current period. They only audited through 2011. So now we have to make all these corrections and button it up to move forward. And there's one other thing I would mention. You may recall, Jim will, on the negative bailout, that increased our property tax revenue by approximately $55,000 annually. And this is the year 3 on that. But now, and it's been looked at by the state controller once, and it was stamped, approved. Recently, that state controller, that auditor, retired, and now his replacement is saying, I'm not so sure that's right. So they may be making an adjustment on that. So that could cost us $55,000
For
a
the
year.
benefit of what the negative bailout is, in 1978, in 1977, the board, we cut our property tax rate because we had a lot of money stashed away. And that was my first year on the board, and I pointed out, you can't be like, every time you levy, for every $3 in taxes that we were levying, because then you set your tax rate. And the last guy standing that actually got to vote to set our tax rate, you can fluctuate it however you wanted to, depending upon how hard people screamed at you and would vote you out of office if you raised it too high. So they were, for every $3 they were collecting, they were spending $2 on services, and they were rat holing $1 away in a reserve. So in 1978, I thought we were the exception, not the norm. Come find out, we were the norm, not the exception, because statewide there was a lot of that going on, and that would help fuel getting Prop 13 passed. But when Prop 13 passed, it locked into place what your property tax rate was the previous year. So this one-time cut that we put into place, and I even advocated we could have zeroed out our property tax collection for that year, and we had enough money bankroll that we could have funded that 1
That
year's
would've got
worth
you
of.
reelected
Oh,
right
yeah,
there. I
it
mean,
would,
I'm telling
but
you.
what would happen is that for the next 30 years, we'd have no property tax. And so because of that, our property tax rate was suppressed and and we've been operating on that fashion. But because of the money that we had rat-holed away to do, the bailout monies that came in from the state to bail out the counties that spent like drunk sailors, and we didn't spend like drunk sailors, they got full money. But there were 10 counties that turned out that you had to spend down your reserves before you could access the state bailout money. And so I think there was 2 counties that had more money per capita, more money than we did. I think Mariposa was one, and I think San Diego was the other one. But anyway, so we were like at the real top of this area. It wasn't until about 1982, 83 that we exhausted the monies that we had already accumulated. And by that time, the bailouts had all evened out, so there really wasn't anything to bail out. Well, then 10 years later, Pete Wilson takes office, and Willie Brown's there, and that's when they created ERAF and all these other things. And so then the state was like upside down and needed money. So they went back to the counties and said, you know that money that we bailed you out on? Well, now you got to bail us out. And so your share of whatever this relief for the state budget, it became kind of like a reverse bailout. And then us 10 counties that had paid our own way said, wait a minute, we didn't get any bailout money because we were smart and played it by the rules and so forth. And they said, well, it doesn't make any difference. Whatever you would have received, as a bailout is your share of bailing us out now. And so those were the 10 negative flow counties, and so they've been playing with our tax revenues ever since. I mean, that's the game, and it's been one that we've been shortchanged on from day one. And Marty lived through, because Butte County was one of the negative bailout counties as well. I believe it was Butte and us. I'm trying to think up in there.
I think San Diego was.
San Diego was the biggest one, and Mariposa County was, I think they were the ones that were number one, so anyway.
Okay. Anything else in this budget line item? Do you have questions on? We made some good adjustments there. Non-departmental.
Like recreation authority, that can
We're gonna leave that in there still for a while.
I want you to notice that that's in there, yes.
And, you know, yeah, it's in there, and I,
That should have been brought, I apologize. for
and
not
I,
bringing
and I,
that
que-
up.
and I questioned
What the
Julie.
hell is that?
I questioned Julie.
Okay.
I questioned Julie on the name of that there, but then I discovered when I got my after talking to her Friday, I got my city council agenda for tonight's meeting, and they have on their agenda the proposed joint powers.
That's just what I named it.
And that's what Marty named it, so the reason why, Julie, that's written like that is because that's how he wrote that. So I only learned about that over
They
there.
better
And we'll continue to discuss it tomorrow, I'm
They
sure.
better be coming out with some money, getting serious.
Yeah, are they gonna?
We're gonna be talking about it tonight, so I'll let you know what they say.
That'd be good.
Okay,
Have some bearing.
let's move on.
By the way, Marty, that JPA is pretty complicated. You and Jared are on some kind of drug, and we need to take you away.
That's good, that gives us plenty of wiggle room.
It
It's
protects us.
complicated.
It protects us.
Yeah, that's right. Okay, Julie, anything,
Do they do?
Do we, on the grand
we
jury.
went over what would you like to do on it? We didn't make any changes for the time being.
Since we're looking for nickels here, on the grand jury, it looks like they only spent 18, and we got them budgeted for 25.
Right.
Does it make sense to?
They want that much money,
Yeah.
don't they?
Okay. Not worth the fight?
Yeah, it's not worth the fight.
Okay.
If I might just add something to that one, because I went to the 2-day training on the grand jury, and what some counties are doing, just something to consider, is, we put together a nice binder. Some grand jury counties, some counties aren't doing that anymore to save cost. I don't know what our printing costs are, sorry. They're just putting out a little newspaper flyer. They're not binding, I mean,
Well, that's where, just recently, I asked
the court.
the grand jury commissioner if they needed the same appropriation as they did last year, and it kind of created a ruckus.
Well, this training came after that
Yeah,
little
but I worked
situation.
with them on coordinating that.
Was that the training that was in here?
Yes,
Yeah.
yeah. And so it was just one thing that they did bring up for cost savings, is you don't have to put together slick binders.
Okay, on the emergency services fund, next one, our professional services gone up by $50,000. Is that our contract with CAL FIRE? Is it going up by that amount of money?
It is a contract, and that could be a maximum amount, but he indicated when he was
Yeah.
here
Yeah,
a
they only,
few weeks
whatever,
ago.
only charges what they actually spend.
That's
The
right.
difficulty with this has been the timing of when we got the contract and when they billed us and when we've gotten the revenue. There's been difficulty. I was happy when Eric was standing there. It sounds like that they're gonna get that caught up, but that's been a difficult thing for me to deal with.
I think we need to dial that back so that, because their contract, what he told me, 'cause he met with me beforehand, and he said that,
It's been about $38,000 to $40,000 per bill that I pay, and that's 4 times a year. So
that's 100.
maybe it's 38 to 48. I would hesitate. I
Yeah, the 170.
probably look
Yeah,
before I
the
just send that back.
173 is the contract. That's pretty close to between 150 and 175, so that's the high end of the contract.
Well, and see if they're a bill behind, I would try to avoid paying more than 4 quarters in one fiscal year, because I just don't work
Yeah.
that way.
The 10,
But
yeah, the
I
10,
would hate to
11.
not be able to
The
pay
the
it.
lower amount in the current year might just be the vacancy there of Janae to.
No, it's the
No.
timing of them sending the bills.
Oh, it is,
The
okay.
1011 at 76,000, that was a half a year
That was a
contract.
half a year,
And
right,
then
that was when.
The 168 is what would be real close to what the normal contract is. And so the 121 is actually, I don't know why that should be down, so the 173 would be pretty close to being what I would say it would be.
I think we'll find it less, but I don't object to keeping it
It
in
might be,
there.
but
I-
just
I-
4
I'd
quarters.
Keep it.
Yeah.
And then, of course, we have the,
What's the transportation and travel for?
we pay, that we
Mileage.
pay their mileage on their vehicle, for mileage
Isn't
reimbursement.
that part of the contract?
I think that maybe, I believe so, I think that, I don't actually facilitate a payment on that, but I think it might be what's charged to the fleet. Is that, do you have any information to add on that?
I would have to look at it, I don't know.
Can we get our money's worth out of that?
Yes, we do.
Yes, we do.
Good program. Yeah.
What was that?
I don't know about Beaver, but the rest of the county does.
I think they provide service even to people.
Yeah.
The old supervisor used to always make sure that, I can't say much for the new guy.
He's sleeping, swear to you.
Okay.
You got fired at Lassen, I mean, I don't know if we want to discuss it, or you want to, anybody want to?
I'll fight for it. You guys wanna take it out?
No,
I'm not adding
you
anything
kidding me?
new.
No, I think,
Kathy would-
I think, you know, it's as much important to have that as it is the other things that we're fighting to keep in the budget too.
Can I ask a question about that? Aiden Fire, I believe, also pays for dispatch services, but not to
Not to
FireNet Lassen. So isn't that the multi-county district in your area? Is it Aiden?
Yeah, it would be eight,
So-
it would be multiple walk-in last minutes.
So my question is, now Brian always felt that this is to include reimbursing Aiden Fire for their dispatch costs, but when it says FireNet Lassen, or Lassen FireNet, it's not clear to me, so I just need clarification on if that's included.
Well, from Lassen County, I'd say,
So what do you need from me?
So we just need to say, instead of referring to it as FireNet, refer to it as dispatch services for fire districts.
Fire dispatch services.
Yeah.
they all, that's fire net dispatch for
I mean, there's some other questions lingering around FireNet Lassen in general. I mean, do they?
The reference to me is really irrelevant, because it's just gonna go under special department expense, but I
Yeah.
think what Karen's looking for is a acknowledgement that Aiden needs to be included.
Yeah.
I mean, I'll put something in there, but.
Yeah, they have a healthy fund balance.
They have a healthy fund balance and they're expensive and, but the charges are what they are. And somebody could negotiate.
Are they?
I don't know, they've been.
I don't know, I sent you
What
from
we get.
Doyle, I know that, I sent you the fire department. You get all of them, don't you, or do you? Yeah, you get them. I mean, I think it's expensive personally. I mean, I wouldn't want our fire department staff to pay it, but Marty, if you ever wanted to negotiate with a better rate, go right ahead.
With who?
Pardon me?
With the independent districts?
No, with FireNet Lassen,
Oh, okay, yeah.
that's some expensive help in there. Any other questions on that one then?
So we reconvene tomorrow then, or do you want to go through other units here?
Pleasure of the board. You want to continue to go through,
Well, let's finish up the, a review of the various departmental budgets and then.
it's fine with me,
Tomorrow we can discuss what we want to
so
do.
you want to go to auditor next?
I'll be fast.
Water and County Council,
I'll try to be fast.
He's gonna offer 25% back, so I think.
Accumulated capital outlay, was there anything on, just jumping back real quickly,
Funding.
Julie, anything on there that, ACO?
The 119 fund?
Yes.
You know, I've had a couple comments about what's in there. Ideally, yes, we would have a list of what this might be used for. I think the function of this to me has been a way to deal with things that have come up that are not,
Right.
in no other way do we have the ability to take care of or to deal with issues. So I don't have a specific list to come up with this money, but it's not gonna be spent unless we can come up with a bona fide reasonable need for the money.
Everybody get that? I'm going to say this
So
before.
right now, the 500,000 doesn't
Right.
have a list?
Doesn't have
No.
a complete list.
Yeah. We've got ideas of how to use it, but it hasn't been, okay.
In my mind, and I think it's more of a matter of time. If I went to every
Yeah.
department and said, what do you think you might have break or need, they would probably come up, maybe not with this much, but If the
Well, and-
control panel breaks,
And-
I was gonna say, if you go to the jail, they'll eat this one up and
And talk
talk.
about lucky break, so when, in 1977, when we cut the general tax rate by, I think it was like $1, the board raised the ACO. No, but I'm saying, the reason why you have this ACO, I wanna tell you why.
I know, and I wanna hear why.
Is because when we cut the general property tax rate by $1, and the ACO was the actual tax rate in itself, and this is what generates is the tax. It is, it still is to this day.
And the cemeteries.
And so, and the cemeteries, and so the board raised the ACO, I think we doubled it from 25 cents to 50 cents was the levy. The general fund rate went from $4 to $3. So what it did is it basically doubled the amount of the ACO because they had some projects they had in mind. So it hadn't been, they left that alone, this would have been half that money today. But, so part of what we gave up that got locked into place came back into ACO. So this is kind of like was a backdoor lucky break on our part because of Prop 13. But that got locked in because we had something that was coming up and we raised the ACO rate to be able to fund it. And then you could adjust your rates to whatever it is you needed to do, back in the good old days.
Karen, tomorrow when they're looking for options, I think you and I talked about, it, they could take some of the ACO to help balance the general fund budget. So if you wanted $100,000.
Well, when it comes to the capital thing, you
Right.
can't use it for salary, but you can use it for like fixed assets.
I'm not aware of any written legislation that,
Requires.
yeah, holds us to that. So that's,
Well, in pretty much every budget, everybody's got something they're trying to buy.
Right,
Right.
exactly.
Yeah.
I mean, it's not,
and I was kind of making a list of things that were capital expenditures in like the general fund budget. I think the planning and the county clerk both had some that could be directed to ACO.
you mean like the copier?
Like the copier, Julie had,
Yeah.
what was Julie's thing?
Yeah.
So I can't
It's
remember.
it's that kind of stuff is what you
Right.
really want to
Right.
try to gear it for. You
That
don't
would
want to
be-
use it for
Salaries and sheriff's.
salaries in sheriff's department or paper clips in Ken Bunch's department or whatever.
But if the board, I'm sorry.
25.
So this fund generates, so the ACO tax rate generates $225,000.
I mean, let's put it this way, if you're gonna do, let's say, some renovation, let's say to renovate the boardroom, a new boardroom, just that space, instead of having that non-departmental as like a $50,000 item that we had last year's budget, the ACO budget would be a more appropriate budget to fund that kind of an improvement. In fact, funding Harry Munyon and funding this NST to do the ACO fund would be right up the alley for that.
Well, and if you decided to actually renovate the old building.
Yeah, if
There-
nothing else, this money accumulated over 5 or 6 years could give you a pot of money to renovate Courthouse Square, like do
You
the,
build a pool.
we could build a pool with it.
There you go.
There you go.
Probably if you owned it, yeah.
Okay, let's get Karen here.
I'm going for prison mitigation first.
I will try to be quick. First, I want to tell you, I have a fantastic staff. They work really hard. They know what they're doing. When we have Laura Dennis in payroll, Judy Davis in property tax, Diane Whipple in the financial reporting, Taya is working real hard with special districts, and we spend a lot of time on special districts. Everybody may not realize that. And Connie in receipting, she deposits everything into the treasury, and the experience they all have, and in that office, they don't teach what they do in college. And so I'm very fortunate to have them. Most of my budgets are the same or less than they've been in prior years. In 2010, I had a vacancy, senior account clerk, and I did not fill that position at that time because I knew we were looking at some difficult years ahead of us. That ended up not to be a very good idea. And I did fill that half-time with the board's approval this year. So I have half a position less than I did in 2010. it still costs less to operate the department than it did that time. Our workload is increasing. We have new GASB standards that we'll be implementing in the next year. We're deadline driven. I wish we had more time to kind of do advanced planning and kind of improve on some of our processes. Some of them all we have is time just to complete them every year and not really improve on them. That's something I'd love to do. So that is the auditor's budget. Do you have any questions on that?
Questions, anybody?
I'm also,
I have,
Sure.
okay,
so on the revenue, recommended revenue, you know, the $1.5 million,
Oh,
it says
okay.
A87 cost plan. Can I a little bit?
yes, thank you for mentioning that.
Yeah.
That's
She
the other.
takes full credit for it.
No, that is the other sheet that I gave you. It is under the auditor's budget unit because we do prepare that report and we compile the data and we have an outside, a consultant that helps us put it in complete the plan. The plan is completed annually and it has to be approved by the state controller's office before we implement it. The total cost plan includes $3,600,000 in reimbursable costs. The county only recovers $1,529,000. Of that amount, $437,000 is attributed to the auditor's office. We do not charge the courts for services we provide to them. We do not charge schools. There's approximately $36,000 in services that are provided and not recovered from the schools. Special districts, we're providing $52,000 in services to, and we do not recover that. That's an option. The board can choose to recover those costs from special districts if you wish.
So wait till you try to do that.
Yeah. So,
Well, you know, I mean, in fairness to the special districts, and I think it's important to state, in Prop 13 passed, the city's got some allocations, of course, the schools got because they shifted the monies over to fund the school, basically the Serrano Priest decision from '72, that was a way for, what we don't pay the schools out of our property tax base ultimately gets reimbursed or augmented by the state. Special districts, for the most part, got cut out of the action altogether. A few of them may have little slivers, but they're really like the lost stepchildren of Prop 13.
What happened was they created this, they took all the bailout money to the cities and counties, to the districts, they put it all in what was called the Special District Augmentation Fund.
right.
Saying, okay, Board of Supervisors, if you want to create some efficiencies, you can decide which district to fund it not. It didn't take very many years before CSAC and all the counties says, we don't want that responsibility, and it went away. And I think the Special District Augmentation Fund then got redistributed to the district.
But only the districts that were in existence at the time Prop
Yes.
13 passed get a
Right.
little sliver.
Little sliver.
I mean, we're talking about fractions of cents that go to them, and most of the districts that have been created since that time don't get anything
That's right.
out of the property tax bill. So when you talk about their revenue, they're getting by on some, not even on a
Madeline
shoot
Fire
straight.
District, that's,
Yeah, they're one of the few exceptions, and they don't even like function anymore, but they have an allocation.
So,
you too.
basically,
Contract function.
Yeah.
the amount, that $1,500,000 revenue is about $437,000 is directed to reimburse the auditors for the auditor services.
And how is that percent, how come that percentage? Is it just like a mandated percentage?
It's calculated every year on everything. It's the number of transactions, the number of payroll checks we process, the number of journal entries, deposits, assistance. We all time study to departments so we know where we're spending our time so we can
So if you go in and
include
talk,
that in the cost plan.
if you go in and talk to her and use her time, she makes a note after you leave the office and you get a bill 2 years later.
You know, that's true, but I'm a real bargain.
So the,
She's a lot cheaper than county council.
I am
The more
cheaper
questions
than-
you ask her during the budget, the more your charges go up.
Right.
You realize you're on the plus.
so the, but your office facilitates the income of that 1.5 million, basically.
We do,
And
we
some of it
monitor
then
that.
gets allocated to other areas, and the 437 really is an offset against the 631.
Correct. So-
How much of the 3,600,000 is attributed